Right friends, welcome back to Learning Space. This is quite an innovative module, and just give your honest feedback. What we are trying to do through this module is we are taking 5 questions from last year examination. Of course, this pertains to economy. So we are taking 5 questions from last year exam and we are trying to relate with the current events. That means we are trying to expand the discussion so that you will have comprehensive view of whatever is taking place in recent times. This is very important. I hope this will be highly beneficial to you. So therefore, give your honest feedback and let us look at the first question. This is 2019 preliminary question. All 5 are from 2019 preliminary exam. I am not going into the answer of this. All of you are well aware, because here self-sufficient in coal production about India, this is wrong. And through elimination process, you can straight away say this is correct. More than that, what is important is from 2020 perspective, what is the present status with regard to various sectors? If you know this in a holistic way, probably you may be able to answer similar question which may appear in 2020 exam. Right friends, let us have a glance at these things. It may be very difficult for you to understand through this slide, but please listen to me. I will explain you each and everything and why they are important for each and every sector, right? Coal sector, 4-5 important points I would like to tell you. We are importing coal, both thermal coal and coking coal. Coking coal, our dependency is 85%. Coking coal is primarily used in the steel industry. So this is inevitable. But the unfortunate aspect is, in spite of having huge reserves, we are importing thermal coal also. That is not acceptable. So you should have this in your mind. Next is foreign direct investment is allowed now 100%. Foreign companies can come and extract coal in our country. Now coal is allowed not only for captive use but also for commercial sale. These things are very important. Next one is open cast mining in our country. Around 90% of the coal is through open cast mines. This is another important area. Then please don't forget lithium and cobalt. Lithium and cobalt are into the news because of the emphasis on electric vehicles. And friends, we are dependent almost 100% on imports as far as lithium, cobalt are concerned. Friends, ethanol blending in petrol, it is 10% by 2022. In recent times, ethanol blending in petrol increased substantially. Friends, another important aspect is, in addition to molasses, we can now extract ethanol directly from sugarcane juice. This is another important aspect, please don't forget. Then if you look at crude oil, please understand these figures, very important. Why I have written 77%, 84%. In 2013-14, I am talking about 5-6 years ago, the import dependence was 77%. Import dependence around 5-6 years ago was 77%. Now import dependence increased to around 84%. The government goal is to reduce 10% within 10 years. That means around 2014 or so, government kept a target of reducing import dependence of crude oil by 10%. That means we have to come down to 67% by 2022 or so. But it is increasing. This is another unfortunate aspect. Next most important aspect. During the past few years, here you see the production of crude oil. I am talking about domestic production of crude oil. It reduced from 38 million tons per annum to 34 million tons per annum. So friends, these two things are very important. Why I have written Barmer here? Because Barmer in Rajasthan, that became another important area of production of crude oil. The Dahej. Why I have cited this? Because the Dahej, it is the area of PCPIR, Petrochemical Investment Region. India planned 3 towards east coast, 1 towards west coast. West coast one is in Gujarat. The Dahej is the main area. It is coming up well. What are the 3 on east coast? Please don't forget Paradip in Odisha, Visakhapatnam, Kakinada in Andhra Pradesh. then Kadalur Nagapattinam in Tamil Nadu. These 4 are proposed PCPIRs. Next one is here, third largest. India is the third largest consumer of the crude oil, don't forget. And if you look at the next one, Strait of Hormuz, substantial percentage passes through Strait of Hormuz. Then why I have written Padur, then Mangaluru, then Visakhapatnam. Strategic petroleum reserves, a special purpose vehicle is created. Strategic petroleum reserves are created at these 3 places, which are sufficient for 10 days. And now government taken a decision to create strategic reserves for 12 days. Friends, they will come up at Padur and Chandikol in Odisha. We learnt in the previous lectures. Refinery products. Friends, why I have taken this? It is the largest component as far as 8 core industries are concerned. 8 core industries are there, which constitute 40% in the index of industrial production, and out of it, this refinery products has got highest weightage of around 28% or so, and in that core industries, fertilizers has got the least weightage. That's why I have taken fertilizers here. Natural gas. Natural gas dependence is now around 47%, and dependence of import on natural gas, that is increasing, just like crude oil. Or you can say in both crude oil and natural gas, import dependence is increasing, right? Shale gas. In fact, why I have written this here, the ONGC non-viable. That means ONGC conducted 5 years of experiments, and it stated that yet present shale gas reserves in our country are not commercially extractable. That is important aspect. Next, methane. Methane is released in the shale gas production. Not only that, this methane contamination of underground water, that also taken place in some countries. Then friends, why I have included guar gum here? Friends, guar. Here, India is producing 75% of guar world production, and Rajasthan contributes to 70%. Why I have included here guar gum? Because guar gum, that is used in the fracking, hydraulic fracturing or fracking, that is the prominent aspect of shale gas extraction. So while extracting shale, guar gum is used, so its demand increased. Right friends, these are how interlinked. If you understand this, you can answer simply a question whichever is asked in the prelims, right? And let us look at the second one. A question was asked in the last year exam. This was pertaining to service area approach. It is part of lead bank scheme. Most of you are well aware. So let us expand this discussion. If you look at the banking sector, students should have clarity with regard to nationalization of banks, because I am expanding this discussion because contemporary issues are to be added. Here you see this LIC is into the news, GIC is into the news, this ICICI, IDBI, these are into the news. In this context, let us expand our discussion. Most important is Air India. Air India is going to be privatized. So students should have clarity with regard to Air India. So friends, depending on the question asked last year, I am expanding the discussion to include various aspects. Friends, here this date 1969, nationalization of 14 banks, bold decision by Indira Gandhi. Subsequently, 6 banks were nationalized in 1980. All of you are well aware. And this date in 1969, that was lead bank scheme was introduced. Subsequently, this service area approach was brought in 1989 or so. This lead bank scheme was introduced in 1969. Then this 1972 differential rate of interest, that means to the poor people at around 4% interest loans are given, certain percentage of loans by the public sector banks. That is in fact differential rate of interest scheme or DRI scheme. And all of you are familiar, in 1975 on 2nd October, this regional rural banks were started. Of course, 1982, NABARD. So friends, students should have clarity with regard to these things. and liberalization in 1991. Subsequently, new generation private sector banks. Friends, when you look at new generation private sector banks, please do not forget the banks which were established in 1990s, ICICI Bank, IDBI. Friends, this is very important, right? And the next important aspect is Air India. 100% privatization is going to be done for Air India. Government will not have any residual ownership. This is important. That means Air India is going to be privatized 100%. So in this context, here 1932, when it was established, initially Tata Airlines, please don't forget. So friends, the origin of Air India was Tata Airlines before independence in 1932. Subsequently, government nationalized it in 1953, right? So these things are very important. And in this context, let me tell you about development finance institutions. That means after independence, banks were not in a position to grant loans to various projects. At that point of time, the idea was it is better if there are separate organizations for the financing of the industrial projects. With that in mind, ICICI was formed in 1955 and IDBI was formed in 1964. They were not banks at that point of time. They were development finance institutions, right? So this was in fact happened in 55 and 64. Prior to that, in 1948, IFCI was formed, but the major developments are in 1955 and 1964, right? Friends, later on what happened with the liberalization and subsequently the concept of universal banks came to the forefront. Because of that, this development finance institutions lost their relevance, and later on all of you are familiar, in place of ICICI Bank came and IDBI became IDBI Bank, right? So this history is important to you because nowadays people are talking about bringing back the development finance institutions, right? Some of them are still available, but the development finance institutions have lost their steam. That is the important aspect. So friends, so these are important. Next, if you look at State Bank of India, State Bank of India Act came in 1955. Prior to that, it was Imperial Bank of India. All of you are familiar. Why are we discussing about SBI? Because SBI globally is the only bank among top 100 from India. As per economic survey, it is stated its position is around 55th in the world, right? Then Life Insurance Corporation. Life Insurance Corporation of India Act of 1956. That means in 1956, life insurance business was nationalized, very important, right? So LIC, when it was born, this is important. Why? Because of the reason part of the stake in LIC is going to be sold. This decision was taken by the government recently, right? And general insurance was nationalized in 1972. Friends, another important aspect is GIC. This is the only reinsurer that is very important, right? Reinsurer, that means it takes part of the risk of the insurance companies. That is reinsurer. In our country, GIC is the only reinsurer. Please do not forget. Right friends, this much is more than enough with regard to expanding the discussion of this question. Look at the next question. This is with regard to most of India's external debt is owed by government entities. Absolutely wrong, right? Then all of India's external debt is denominated in US dollars. Absolutely wrong. So friends, all of you are familiar with masala bonds. If you can recollect the discussion of masala bonds, you can easily straight away say that all the debt cannot be in US dollars. In this context, a question may be asked on the external front this year also. A question is expected. Why I am discussing in a systematic way? First one, a question is expected how these sectors are performing. I tried to cover some of the sectors and in the future lectures certainly I would like to cover the remaining sectors also. And similarly here, what happened after independence with regard to various approaches in the banks, right? So friends, a question is always expected with regard to 1947 post developments, how the financial sector fared, right? Third one, this is pertaining to external sector. On external front, a question is always expected. It may not be the same question. So what is important is you should understand all these terms. Friends, external debt, a question is normally expected. So friends, in the external debt, let me tell you here, the India's external debt by government entities is not high. It may be around 20% or so. So therefore, India's external debt is predominantly by private entities. That is the most important aspect. Please don't forget, right? India's external debt is mostly by private entities. Next important aspect is India's external debt. Short-term debt is not much. Short-term debt is dangerous because it has the risk. That means if we are not able to roll over that, we have to pay the entire amount. So therefore, it creates currency risk. So therefore, short-term debt is dangerous. But if you look at India's external debt, short-term debt may be around 20% or so. So friends, the government entities debt is not much. Short-term debt is not much. These things are important from your exam perspective. Friends, external debt. What are the components? If you look at the external debt, major component is external commercial borrowing. Indian corporates, both private sector, both public sector, both borrow from abroad because of lesser interest rate. So friends, the largest component is external commercial borrowing, most important. Then NRI deposits. NRIs deposit in the bank accounts, and that comes under external debt. Please don't forget. Then the components of private and government debt, I already explained you. Private component is much higher in comparison to government debt. Then dollars, masala bonds. Two things I would like to tell you. Out of the total external debt of India, predominantly majority of which is dollar. So the topmost component is dollar. Here it is written as entirely in US dollars. That's why the statement is wrong. But predominant component is in US dollars and substantial component is Indian rupee. That is because of the reason masala bonds are being released. Masala bonds, that means Indians borrow from abroad in rupee currencies. When Indians borrow from abroad in rupee currencies, there is no currency risk. The currency risk lies with the investor, not with the borrower. But when we borrow in dollars, currency risk lies with the borrower. So friends, here currency risk, that is the important aspect. Currency risk will be there when we are borrowing in dollars, but not there when we are borrowing in rupees. This is the important aspect. Friends, to avoid the currency risk, we have to go for hedging. That means the risk will be borne by some third party. For that, we pay some amount. When the currency depreciates, the risk will not be on us. For that purpose, hedging is used, right? Then another important aspect, please don't forget. Last year, India announced foreign sovereign bonds. All of you are familiar. Government releases the government securities. These are domestic. Quite often you talk about G-Secs. G-Secs are domestic. Last year, government decided to go for foreign sovereign bonds. In India, whatever we call G-Secs, these are domestic sovereign bonds. And government announced to go for foreign sovereign bonds. This is the important aspect. Once the government go for foreign sovereign bonds, then this Euroclear platform, this is the important platform across the globe. This platform will be used for the transactions, right? Then friends, foreign exchange reserves, right? Why I have taken this word here is India's external debt is around $500 billion or so. and India's foreign exchange reserves are around $475 billion or so, and most of them are in foreign currency assets, please don't forget. So friends, we deliberated in the previous lectures, foreign exchange reserves are quite sufficient. They are more than global standard of taking care of 10 months of imports, which is known as import cover. So we have sufficient import cover. I hope you got all the points with regard to foreign exchange reserves, and foreign exchange reserves are on increasing trajectory. Right friends, these are more than enough. So you can answer any question as far as this external debt is concerned. Look at the next one. This is the basic question. Why this question is asked? This is asked to test your basic knowledge, right? So here you see which of the following is not included in the assets of a commercial bank. I told you number of times, when banks are giving loans and advances, they are assets. When banks are collecting deposits, these are liabilities, most important. So here deposits is not assets. So this is asked to test your basic knowledge of the banking system. This is with regard to external front. So friends, UPSC goes by various domains, whether you have sufficient knowledge in various domains or not. Let us expand this. Students should have clarity with regard to, that means in the banking system, students should have clarity with regard to assets, liabilities, capital adequacy ratio. Why these three are linked? Let me tell you. Here assets means, before assets, let us take liabilities. Liabilities means we deposit money with the banking system. We deposit money, right? And after that, they give loans. Banks make investments also. Banks invest in the government securities. They make private investments also. These are all assets for them. Why they are called assets? Because they generate revenue. And why our deposits are called liabilities for the banks? Because they have to pay interest to us. That's why they are called liabilities. And friends, our deposits, they give as loans. So therefore, to ensure security, to ensure stability to the banks, their own money should be there. Their own money is nothing but capital adequacy ratio, 9%, something like that. That means when they don't have their own money, when capital adequacy ratio is not there, they will be careless. That means to have stability in the banking system, capital adequacy ratio is important. It is around 9% or so. So friends, these are one asset. Next is these two. What are these two? Here, liquidity adjustment facility, marginal standing facility. That means these two are basically for day-to-day liquidity in the banking system. That means you may be a crorepati, but you require 100 rupee note in your pocket to have lunch, to have dinner when you go outside. So friends, day-to-day liquidity is very important. So friends, liquidity adjustment facility. What is this? Repo rate, reverse repo rate. This comes under liquidity adjustment facility. All of you are well aware, when the Monetary Policy Committee is setting the repo rate, right, it gives indication to the interest in the market. We learned in the previous lectures. So friends, here liquidity adjustment facility, then marginal standing facility, right? When the liquidity adjustment facility window that exhausted, there is some limit. That means for the day-to-day liquidity, you can borrow something 100 rupees, 200 rupees, something like that. You cannot ask for thousands, lakhs. So therefore, similarly, banks also under liquidity adjustment facility, they can borrow up to certain limit from Reserve Bank of India. And there is another window, that is marginal standing facility, right? Right friends, then CRR, SLR. CRR and SLR, cash reserve ratio. Why this is kept? Here you see, here certain percentage of money is to be kept in cash with Reserve Bank of India. SLR, certain percentage, around 18%, that can be kept as cash, gold, or in government approved securities. So that means certain money is locked up. Why certain money is locked up? Certain money is locked up to ensure the stability of the banking system, or you can say, to be specific, banks should remain solvent. Banks should have proper liquidity. So friends, to ensure proper liquidity, to ensure solvency, to ensure stability, these tools are intended, right? Then open market operations, that means to control the money circulation in the market. This open market operations are undertaken by the Reserve Bank of India. Then of course, quantitative easing and easy money policies. Friends, these two pertains to advanced countries. We need not worry much. Quantitative easing, that is in fact mass purchase of the bonds. It is not regular day to day. It is specific. It is oriented towards some outcome, that is quantitative easing. Then easy money policies, reducing the interest rates to abysmally low, right? And friends, banks and NBFCs differences. This may be a potential question. Friends, banks all are regulated by Reserve Bank of India. NBFCs, there are so many regulators. NBFCs are called shadow banks. And another important aspect is, because of regulatory domain extending to various regulators, and the next important aspect is, as they are not that stringently regulated just like banks, sometimes NBFCs failures are taking place. Recent IL and FS failure is due to asset liability mismatch. In this context, we can expand the discussion towards systemic risk, contagion risk. We will reserve this for the next class. Right friends, this is very important. Quite often you talk about current account, capital account, right? So students should have clarity with regard to current account, capital account, right? Capital account means to establish a Coca-Cola factory, to establish Toyota car factory. If money is coming from foreign countries, that is foreign direct investment. Then foreign portfolio investment. Sometimes when it is favorable, money will come to stock market and it may go at any point of time. It is highly volatile, but it is part of capital account. Then external borrowings. Friends, these are all part of capital account, right? And here current account. If you look at the current account, here you see question is asked. Just examine the question. To answer this question, you should have clear idea. Here first point is the foreign currency earnings of India's IT sector. That means he is talking about reducing the risk of a currency crisis. Here students should have clarity which is positive, which is negative. Unless you have clarity, you cannot answer this question. Here you see the foreign currency earnings of India's IT sector, right? All of you are familiar. In the services we are positive. Then remittances from Indians abroad, right? These two, and increasing the government expenditure, this has nothing to do with it. So friends, here 1 and 3, that is the right answer. So friends, to answer similar type of question, students should have clarity. Here you see current account. What are various components? Mercantile trade. It is almost always in deficit in recent times, right? So friends, here it is having a deficit. Then primary income. Primary income means when the foreign companies are establishing their bases here, suppose Coca-Cola company established, Toyota established, Hyundai established, after that they take away the profits, they take away the royalties. So that is again negative for us. That means more money is going out of the country that way than coming to the country. So in the first one also we have more imports than exports. So money is going out more than what is coming to the country in first two cases. In the next two cases, more money is coming to the country. So therefore here you see this is contributors to reducing the risk of currency. So to reduce the risk of currency, these two, because of IT exports and remittances from foreigners abroad, these two are acting as stabilizing factors as far as currency risk is concerned, right? So friends, such a type of questions you can answer when you have clarity. So friends, in the mercantile trade, we have negative and this primary income, negative, and these two we have positive, right? Because of that, they act as contributory factors for reducing the currency risk, right? Please don't forget, sometimes a question may be asked, out of FDI and FPI, foreign direct investment is stable, foreign portfolio investment is highly volatile, so therefore currency risk is more as far as foreign portfolio investment is concerned, right? And external borrowings, short-term borrowings are dangerous, long-term borrowings are not dangerous. This is another important aspect, but from that perspective we have less short-term debt, right? So friends, if you are satisfied with these type of lectures, some of the revision modules will go this way. Here what we tried to explain you is, we have taken 5 questions and we explained how we can expand our discussion, and if you are happy, then we will expand this towards science and technology, acts, policies and programs, as well as the ecology and environment also. Just give your honest feedback, right friends? Have a nice day. Thank you.